Hello and welcome back to Dukascopy TV. I'm Natalie MacDonald. Joining me in the studio now to discuss the euro is Valentin Marinov of Citi. Valentin, thank you so much for coming in today.
Thank you for having me.
Now, as I mentioned, we're going to be touching on the euro today, and it appeared to have a pretty quiet summer as the US dollar and the Federal Reserve really did take precedence over the summer trading. Talk us through Q3 performance in your view.
Well, euro had a pretty good third quarter. Euro was very well supported against the dollar to a degree, against most emerging market currencies, less liquid crosses. And there were two key drivers to that. First was the improving data out of the Eurozone, which kind of confirmed the view that the worst for the Eurozone may be behind us, and that in combination with further abatement in peripheral risks actually helped investors really rediscover the euro, if you wish. The second, obviously, the fact that that tail risk of a Eurozone breakup was no longer perceived as being on the table, right? It kind of helped investors to focus on other euro features, like the fact that it is the second most liquid reserve currency. And that was a big help at times of excessive risk aversion. Really, the Fed-driven sell-off in emerging markets kind of boosted the euro status as a safe haven currency, and that added to its resilience. So overall, really the combination of better than expected Eurozone data plus safe haven bid, all that helped the euro.
Now, another element of the euro's sideways summer trading has been due to the political pause that we saw in the lead up to the German election. With Merkel now back in the hot seat, do we expect the problems of Europe to rise up again and potentially taint euro performance?
Market is expecting more of the same from Merkel, which is a more piecemeal approach towards resolving any potential issues should they arise down the road. And I think that such issues may well come to the fore before long, especially given the deteriorating fiscal outlook in large parts of the Eurozone. And indeed, there may be improving, but very slowly so improving growth outlook for the likes of Italy and indeed Spain. So potential downgrades for those countries could deal quite a blow to the hard-won confidence in the euro and could present Chancellor Merkel with a similar situation we've been in the past, and which has in the past left euro quite vulnerable. So yes, risks could emerge, and the fact that Ms. Merkel will be in charge is not necessarily very positive euro outcome, but in many ways I guess it's more really the approach they're going to adopt from here. So more of the same, I guess, is slightly euro negative.
Now, Valentin, just touching on central bank policy there for a moment, and with central banks on both sides of the Atlantic really at great pains, as it were, to ensure the pace of economic recovery continues, with both the Fed and the ECB remaining dovish, talk us through the relationship we can expect between the euro and the US dollar. Will it be euro strength over US dollar weakness as tapering concerns continue, or will the US dollar strength prevail over a stagnant euro at present?
I think the relative policy outlook between the Fed and the ECB will be a key euro-dollar driver down the road. I mean, right now, euro-dollar is very correlated with a proxy for that policy outlook, which is the 2-year rate differential, right? That's the main driver at the moment, especially given that sovereign debt risks have ceased to kind of really drive the euro, in any meaningful way. I would expect this to continue. And as you said, actually, it's really that relative policy outlook that could evolve and then drive the path of the euro. In this regard, I think tapering is still very much on the table. The Fed have more or less delayed the inevitable. As a house now, Citi still sees like 50% chance of taper as soon as December and almost 100% chance really by March next year. So tapering will come. And on the back of that, there may be some renewed dollar buying, if you wish, to come in coming months. At the same time, what we are seeing increasingly from the ECB is willingness to lean back more and more aggressively against the latest evidence of global monetary tightening, feeding into a tightening of monetary conditions in the Eurozone. And with that, I guess worth highlighting the latest comments from various governing council members about potentially relaunching LTRO really as a way to really address that tightening in the Eurozone monetary conditions, but also to address the continuing drain of excess liquidity, which could ultimately lead to the ECB losing control over the very short end of the curve. curve. So with that in mind, I guess the next few policy meetings next week, and indeed the meetings in November and December, ECB policy meetings could prove quite key. One potential trigger for LTRO could be renewed concerns about the quality of bank assets in the Eurozone, and indeed subsequently concerns about their ability to access wholesale markets and all that for funding. The release of the asset quality review is due mid next month, and potential indications that the ECB may be concerned about that could be interpreted as indicating or increasing the chances of more accommodation to come from the ECB. So what I would think could happen is a bit of a role reversal where we could see, in terms of euro-dollar, where we could see some dollar buying but also euro selling on the back of that changing relative policy outlook, where the ECB is now seen as increasingly more dovish, and at the same time the Fed is still perceived as heading towards the exit at some point in the near future. All that could point at some more downside for euro-dollar in coming months.
Lastly then, Valentin, for the euro trader, which crosses would you advise our viewers to watch out for? What's looking particularly interesting to you?
Well, I think that the Scandinavian crosses, euro stocky, euro versus Norwegian crown, and euro versus Swedish crown could be particularly interesting. The reason for that is that those two are particularly sensitive to what's happening on the relative policy outlook front. That is, how they are responding to shifts in the relative policy outlook between the ECB on the one hand and Riksbank in the case of euro stocky, and Norges Bank in the case of euro-NOK. So as we expect the ECB to become more and more dovish, but at the same time we foresee somewhat limited changes really in the policy outlook for both Riksbank and Norges Bank, that could mean that the relative policy outlook could add the headwinds, cyclical headwinds for both euro-NOK, euro-stocky, and their sensitivity is really kind of unparalleled in the G10 space compared to other euro crosses. So actually shorts there, like bearish positions in euro-NOK, euro-stocky, could be an interesting way to express that view that the ECB may be becoming a bit more dovish from here.
Valentin, thank you very much for coming in and sharing your thoughts today. That's all we've got time for right now, but we'll be back shortly with more exclusive interviews. Goodbye for now.